Friends, across the country, taxpayers are witnessing GST audits, assessments, scrutinies and investigations by field officers in their premises or at the departments. Certain questions are raised by the field officers during such assessments and scrutinies. Most of the questions and issues relate to input tax credit, and hence we are starting a series on such issues and our analysis on such issues raised by the field officers during their scrutinies and assessments. One very important issue which is raised by field officers is the input tax credit eligibility or reversal on waste or scrap. The issue revolves around section 17 subsection 5 clause H of the CGST Act, which requires that input tax credit on goods lost, stolen, destroyed, written off or disposed of by way of samples or gifts are ineligible or have to be reversed if they are taken. Let us understand these terms one by one before we get into the issue as to what is eligible and what is required to be reversed and what may not be required to be reversed. Goods lost or stolen means the goods which have been either inadvertently given away or taken away without permission, and thus their existence in the hands of the taxpayers have ended. Goods destroyed means the goods are rendered defective beyond repair and thus their existence have ended in the hands of the taxpayer. Goods which are not usable and their existence have ended are written off in the books of accounts as unusable by the taxpayers, and goods which are in existence but the proprietary of the taxpayer wherein has ended are considered to be disposed of by way of gifts or free samples. For example, goods which are lost during the process of manufacture by way of evaporation, by way of defective goods, goods which are lost by an external event like natural calamities, floods. Kerala floods were an example of this. Goods which are given away by way of gifts to employees, inputs which are damaged either before manufacture or before supply or during the process or intermittent processes during manufacture or supply are written off. Now let us examine what are the categories on goods or inputs where input tax credit may or may not have to be reversed. First and foremost, there is a difference between goods destroyed and goods damaged. Goods destroyed are considered as defective beyond repair. However, goods damaged may be defective goods, but after repair they can be used as the same goods. For example, if a laptop has been destroyed during floods and the laptop is not usable but disposed of as scrap, would be considered to be as goods destroyed. However, if the motherboard of the laptop is hitched and after repair that laptop can be used as a laptop, that is, the shuttle can be used as a shuttle, then it is considered to be as damaged. 17(5)(h) requires input tax credit on goods destroyed to be reversed. However, input tax credit is not required to be reversed on goods or inputs which are damaged. Now, there can be two broad categories of goods or inputs lost, stolen or destroyed or written off. One would be goods or inputs lost, destroyed, written off due to normal events, which is called normal loss, and the other is goods lost, destroyed due to abnormal events, which are abnormal losses. Goods which are evaporated, which are found to be defective during the process of manufacture or during the process of supply or the intermittent processes of supply or manufacture, are considered as normal loss. However, goods or inputs which are destroyed due to abnormal events like floods, etc., are considered to be as abnormal losses. Normal losses are inherent to the process of manufacture or supply, like goods are found to be defective during testing after manufacture, goods are lost or damaged or destroyed at the time of storage or due to handling. These are all examples of normal losses. However, where there is a external event or a natural calamity like flood, earthquake, etc., then the goods which are destroyed are due to abnormal events and are abnormal losses. Normal losses are inherent to the process of manufacture, whereas abnormal losses are not inherent to the process of manufacture. They are over and above the process of manufacture or supply. There is an industry standard for normal losses. It can be 1%, it can be 3%, 5%, whatever. But it is standard across the industry. If you are in the business of manufacturing mobile phones, then there would be certain mobile phones which would be found defective during the process of manufacture or which are defective post manufacture but before supply. However, some mobile phones could be damaged due to abnormal events like waterlogging, like floods, etc. So friends, in the case of ARS Steel, the Hon'ble Madras High Court created a distinction, created a class whereby goods which were lost or destroyed due to normal losses were considered to be events where input tax credit was not considered to be reversed. The Hon'ble Madras High Court ruled that to consider that the entire inputs which go in the process of manufacture would be the same which would find its way in the finished product would be unrealistic, and hence normal losses have to be distinguished from abnormal losses due to abnormal events, and input tax credit would be required to be reversed only in the case of abnormal losses which are due to external compulsions or abnormal events. Therefore, goods which are scrapped due to normal losses would be those goods where input tax credit would not be required to be reversed, is our respectful submission in the case. The same was again reiterated by the same Honorable Madras High Court in the case of R.K. Chettiar versus state tax. So, this is a critical issue which is brought out by field officers during assessments, and it is our respectful submission that normal losses input tax credit may not be required to be reversed provided the same can be substantiated through documents. We would take up in this series on input tax credit issues other issues in the coming weeks in June and July 2022, and we would bring out all the videos at one go at the end of the series. Therefore, stay tuned and keep looking at this channel and liking this channel. Thank you very much.